Hello everyone. Today I would like to walk you through doing journal entries for adjusting entries. A few of you reached out to me and said that this journal entry exercise was really confusing. Don't worry about it. It is very confusing, and I wish we were in class together so that we could walk through this on the board together several times. But failing that, I will walk you through how I went from having this blank journal entry with 4 questions to our answer key and where we got these numbers. And I will kind of flip back and forth between this, the answer key, the exercise, and I've put together some T accounts as well so we could walk through it. So when we are doing adjusting entries, we are going to see 4 types of adjustments. One is going to be to depreciation, which is the estimated value of a fixed asset that has gone down. The second thing that we will do is prepaid rent. And so we paid for rent for a period of a year or 2 years or whatever it is, and we need to reflect that that is now an expense to the business. Same thing for insurance. So insurance and prepaid rent work the same way. And finally, we need to update our supplies. So I'm going to walk you through how I came up with the answer key for all 4 of these. And again, I will be flipping back and forth between a few files to help us understand this. So let's look at the first one. We have office equipment that was purchased for $25,000. The cost principle states that we must put office equipment on the balance sheet at $25,000. So what the government allows us to do is we are allowed to do something called depreciation, which is an estimate for how much this equipment has gone down in value. To do that, there are 2 ways: straight line and declining balance. I mentioned it in a previous tutorial, and I'm going to leave how we do straight line and declining balance depreciation over the course of several years for another tutorial in midweek. Right now, let's just look at this question. So our office equipment is worth $25,000. We have already depreciated it $5,000. So that means in a previous exercise, we have taken $5,000 in value off of that asset. So the book value, or the estimated value, is $20,000. So the first thing I do for this question is I take my $25,000 value of my equipment, and I'm going to subtract the amount of money that I've depreciated already. So that gives me a book value of $20,000. So far, so good. Now I see that I depreciate at 15% per year using the declining balance method. The declining balance method is important to know versus straight line, but again, I will explain that in another tutorial. All of the journal entries I will be doing will follow the declining balance method so that we can follow this structure every single time. So we have a book value of $20,000. I am then going to multiply that by 15%, which is the value of the asset that I'm allowed to depreciate every year. So every year I can take 15% of the book value off. So when I do that, I get $3,000. So if I was doing end of year adjustments, I would be done. This would be my adjustment that I would work through. However, our exercise says we are doing end of month, which is really important. So we're just going to take one more step here and simply divide that by 12 months. And you are going to get a depreciation value of $250 per month. So if I'm using T accounts, I now have a new depreciation value of $250, and that's going to be also added to my accumulated depreciation. So my adjusting entry is this. So a depreciation expense of $250 and accumulated depreciation of $250. So when I go to my question, I'm always going to debit an expense. So it's going to be depreciation expense, and we know that amount is $250. And then I am going to have accumulated depreciation for $250, and that is the depreciation for the month of September. And that's it. So if I was doing it for the year, I wouldn't have divided by 12. Otherwise, I'm going to divide by 12 in this case to get $250. Okay, let's go on to our next one. So we see that the beginning balance in prepaid rent is $8,000 and the monthly rent is $2,000. There's a bit of a trick here. It looks like we're trying to do something that's a little bit more complex than it is, but this one is actually super simple. We have September, October, November, December rent left at $2,000 a month. That's why our prepaid rent account is at $8,000. What we need to do is say September is done now, so we need to take $2,000 away from that. So if we go down here, our prepaid rent is at $8,000. The month is done. Our monthly rent is $2,000. So we need to do an adjustment that says we had a rent expense for the month of $2,000 and our prepaid rent now has a value of $6,000, which is October, November, December rent. So our adjustment is going to be rent expense. We always debit the expense and then we credit the asset. So let's go back to our exercise here and we will say rent expense of $2,000 and our prepaid rent has gone down by $2,000 and we say rent for September. Okay, now those are two of the four that we have done so far. This third one is a little bit different than the rent because we at the beginning of September bought a 4-year insurance policy for $9,600 and the balance is still showing as $9,600. So here's what we need to do. We need to take $9,600 and divide it by 4 years. The reason we divide it by 4 years is because that insurance policy has been taken out for 4 years. So 9,600 divided by 4 years gives us a insurance expense of $2,400 per year. Remember, we're doing this for the month, so we're going to divide this by 12 months. And that will give us, oops, not M, it will give us $200. So in our answer key, we can see that our prepaid expense and prepaid insurance adjustment is $200. Let's go to our T account here. So we had prepaid insurance for $9,600 divided by 4 years and then divided by 12 months. You get a monthly expenditure of $200. And so for the month of September, our insurance cost the company $200. So our adjustment, once again, we are going to debit the expense, credit the asset. So our adjustment is insurance expense, $200, and whoops, that line is being cranky. Prepaid insurance, $200, and that was insurance for the month. Okay, so now we know that we had 48 months of insurance, or 4 years times 12 months. Now we have 47 months of insurance left, and the value of that insurance is $9,400. So if we were to do our balance here, we now have a balance of $9,400, and we will reflect that next month. Our prepaid insurance will show up at $9,400. Our prepaid rent now has $6,000 of a balance, not 600, 6,000, and so on. So the red numbers are what we are using for our adjustments, and let's do our final adjustment. So we had supplies at the beginning of the month our account shows that we have $2,400 in our supplies. However, at the end of the month, we do an inventory. We realize that our value is only $850. So we need to do an adjustment, and the adjustment isn't $2,400 or $850. Let's walk through this one. So we add $2,400 at the beginning of the month. We now show that we have $850 in our account. So the adjustment is $2,400 minus what is left over, and we have used $1,550 worth of supplies for the month. That means our expense for the month is $1,550. And so my adjusting entry is going to be, you guessed it, expense first, supplies, expense, and it's going to be supplies, and it's going to be 1,550. Supplies used for September, and that's it. So those are our 4 adjusting entries. Again, I know this is complex. I will put some more exercises up, and I will continue to follow this format for you so that we can get into the rhythm of doing these. I would like to stress once again, every single time we do a journal entry or an adjustment, we are going to debit the expense and credit the asset. So you can see here, depreciation expense, rent expense, insurance expense, supplies expense. All debited, they are all expenses. Accumulated depreciation is a contra asset, which drives down the value of our asset. So this is an asset. Prepaid rent is an asset. Prepaid insurance is an asset, and supplies are an asset. So there's your tutorial on doing journal entries for adjustments. I hope this helps you, and later on this week I will post one last tutorial for the week on how we work through depreciation for several years. As always, reach out if you have any questions. Take care, everyone, and we will be in touch soon.